Friday. It's September 5th, and it's the fourth trading day of the month, or today will be in about a half an hour. And with me is Daryl. How you doing this morning, Daryl?
Doing wonderful. Good to see everyone. Good morning, Victor.
Yeah, thanks for joining me, Daryl. And we're going to be looking at stocks. We had some earnings yesterday. Broadcom announced their earnings, and incredibly, they're up 14.5 in the pre-market. Immediately after their earnings, the stock didn't have a particular direction. It was, bouncing up and down, but now it's certainly picked a direction for sure. Thought we could look at Broadcom and Nvidia and a couple of other stocks. A couple of stocks that came up yesterday in the stream that I thought would be interesting to take a look at. Before I jump into it, let me thank a new member. It looks like somebody joined, Francisco Ibarra. Thanks for becoming a member. Thanks so much. And please email me at victorhinvesting@gmail.com. And I'll set you up with all the perks. And I really appreciate your membership. Thank you. I'll put my email in the chat when I have a minute. But thanks for joining. So on the channel, just to kind of set how we're going to operate for algorithm. Thanks so much for that super chat. I appreciate it that you sent over. Thanks so much. We're going to look at stocks, and I really like how Daryl looks at charts. He looks at what's been going on. He looks at a variety of things that I don't really cover. I cover fundamentals, and the fundamentals of a company, sales growth, revenue growth, profitability, free cash flow, balance sheets, looking at the net present value of what their cash flows add up to today. Also looking at the net present value of profits in the form of earnings per share, what that looks like if we accumulate that over time. And I give you that particular valuation, and Daryl gives us the charts. So that's how we're going to go about things. We're going to look at the stocks that are interesting and the stocks that people want to see. Peter, good morning, sir. So what do I think about Lulu? It may be an opportunity. Why don't we take a look at it again? I had done a video on Lulu. It was a member request, and I did a video, I'm going to say a couple weeks ago. It did look good because I happen to think the brand has a lot of value, and their stock has been sold off quite a bit. So it may be an opportunity. Let's look at it. Let's see where we're at. Saeed, great to see you. Thanks for joining. Thanks for everything there. And then for algorithm, Duolingo took a big dip yesterday. Did it? Okay. And I know I've looked at Duolingo. I'll take a peek at it later. Carlos, good morning, sir. I know it's early in your neck of the woods. Thanks for joining. All right, so let's get rolling on what is going on. Broadcom is up now 15%. Incredible. And I did hear that they had a story where they're going to develop this AI chip with OpenAI. Interesting. I know that Google Alphabet already has a chip that they use in a particular way, and OpenAI may want to do the same thing. So that makes sense. And it's really investors want to own Broadcom. It's up 15% today. That is incredible. This stock is doing great this year in 2025. It's up 32%. And for the 1 year, it's up 100%. So it's going to, do much better after it opens today. It does have a valuation that's a little pricey for this year. It's 111 PE. Next year, 37. It's a strong buy, but fairly priced. The thing about and they haven't loaded the most recent quarter, but the growth is good, but it's not incredible. That's one thing I would say fundamentally. They're growing at the same rate that Meta's growing. They're growing at the same rate, and actually Meta might be growing a little better. But the revenue growth is not incredible. Nvidia's is incredible. They have a bigger top line number, and they're growing at a faster percentage. So this one here is a little bit of a to me, it's a little bit of a mystery. It's like, wow, investors really like this stock. So this stock is rising. I did a valuation yesterday during the stream, and it looks like it's priced 17% too high based on my analysis of their cash flows, future cash flows, and earnings per share. But the market really likes it. What do you think, Daryl?
Yeah, I'm looking at the aftermarket and pre-market, and it has not slowed down at all since yesterday. So there was a lot of fluctuation, as you mentioned, within these are 15-minute bars. So within 30 minutes or so, there was highs up to 314 and lows down to 298. So a pretty big spread. But since that time ish, look at this 5-period average here. I mean, it just is going up. So this is looking good going into the market open this morning for sure.
Yeah. Yep. Must be a good morning for all Broadcom stockholders. And what's surprising is that Nvidia stock is down. It's like, I always think of, the pair will kind of trade together, but I'm wrong. All right, so let's take a peek at Lulu and revisit that stock. Lululemon is a consumer discretionary company. They're an apparel company. They also have retail outlets now. So apparel retail, and their growth wasn't great. Wow, they're down 20%. And their numbers are updated here. See, they are growing. Now, the one thing in retail, if you're opening new stores, that's a way to grow. But there's a metric in that industry, same store sales. And when you look at that metric, they only grew by 1%. So overall, they were growing 6.5%. But if you look at same store sales, they're only growing by 1%. That's what I think investors are really not liking. It's like, guys, you're not growing. That's a problem. And I think we didn't talk about the jobs report this morning, but Daryl was mentioning it to me before we got started. The jobs report shows that job creation isn't very good. There's not a lot of jobs being created. Having said that, the economy may slow down and there might be less money, less discretionary money in the economy. That would affect Lululemon, because I know their apparel is higher price. It's not like you're buying it at a discount. You're usually paying up to buy Lululemon apparel. So that might be a part of it. They are a good, profitable business. If you look at their margins, they have margins nearly at 60%. That's really good for an apparel company. It's very, very good. And their free cash flow is good. 1168 is their trailing 12 months. So Lululemon fundamentally looks like a good business. The really important thing is they have to figure out how can they grow. They've been trying to get into tennis, and that's not a bad idea. I think their brand would probably fit well with that type of consumer that likes tennis. But so far, it's not creating a lot of growth. And in the past, they had been growing quite a bit. So let me, I'm going to update my evaluation. You want to take a look at the charts for Lululemon?
Sure. I'm going back 10 years. And the reason for that is it's going to open up around 165 or so,
Uh-huh.
which is going to put them just barely above the COVID lows. So they
Really?
won't have, they won't have been this low in over 5 years.
That,
So,
I mean, to me, it's telling me this thing's discounted and the market's overreacting because COVID was COVID. This, I don't know. Keep going.
well, so there would be support there at the COVID line, so around 133 or so. I'm looking at these price by volume bars, so I'm looking at 10 years worth of data. The highest volume by price was in this 47 to $82 range. If we stacked up almost not all of the volume, but this one's just swamping all these other volume by price bars. Even though it consolidated here for a long time, there wasn't as much volume,
Mm-hmm.
buying volume being traded. So I'm not a big fan of retail. I don't have very high hopes. It just depends on where you sit with apparel retailers. I think they're going to continue struggling. I look at other stocks, and there just seems to be a lot more opportunities.
Yeah, I have to agree that with retail, it's retailers will have like a good 10-year run and then they tend to fade because the consumer probably changes their preferences. Like, hey, that was really in fashion 10 years ago, but that brand just didn't stay. I agree with that. And that may be happening with Lululemon that, hey, their brand was really cool 10 years ago, 20 years ago, but today, not so much. And their
There's going to be
competition, right?
there's going to be a lot of disappointed buyers yesterday.
I know.
They traded 14 million shares yesterday.
Oh
They
man.
typically trade 3.5 million, and that was on a buying day. So there's going to
Jeez.
be a lot of disappointed people this morning.
Well, hopefully they own Broadcom and then they're kind of
There you
hopefully
go.
even.
There
But
you go.
if they don't own Broadcom, then they're not happy. Yeah, it's down almost 20%. Man. All right. Well, I can flip over to my screen. We'll go over the value of Lululemon. So the forecast that analysts are seeing is that the company is going to grow, and they're growing. They're currently in this fiscal year that ends February 2nd, 2026. They were expected to grow a little under 8%, and they're going to grow 7, then 6, and then 8. Their earnings per share will be growing at a nice clip. Okay, that looks good. And 1575 is their earnings per share for next year. Their PE ratio is dropping. It's a little bit of the company is not a very desired company at this time. And you know who else has been an shoe and apparel company that hasn't done all that great is Nike. Nike's really done poorly as a stock. And part of it is the growth. They're not growing. And it's like there's no growth in shoes right now. And that is interesting. All right. So real quick shout out. Braden watching the parking lot, about to take your first LSAT. Hoping good luck with the LSAT. Is the LSAT the one you take to get into law school? I think so. But good luck with it. Hopefully you score really well. Yeah. Good luck with the LSAT. All right.
Let me show you a Nike chart.
Sure. Speaking of attorneys, we have a really good community of investors. I can't say that I know one attorney that's a member. So it would be good to get an attorney in the mix. Back to you, Daryl.
Okay. So I was working with a group of people that were really big on Nike, and they have done really well. This is a 20-year price chart that I added a trend channel to. So this pink bar here is connected to the low in February of 2009 and connected to the low here. And then I did a copy and paste and drug that line up to the highs. So that forms a trend channel. And I had a whole bunch of people hoping that Nike was going to recover. But I put this chart together probably at least a year ago, and it could have been 2 years ago. But once this thing broke down through that lower bar, I thought they were kind of doomed for a while. And sure enough, the price got cut in half.
Yeah, it's
from that lower bar
good.
down to here. So I keep an eye on these long-term trend channels for certain stocks, and this is one that played out almost exactly like I thought would happen.
I appreciate you showing it because I come back to Lululemon and I think of brand, right? The brand of Lululemon, I most definitely believe it's got a lot of value, but Nike might be the most valuable brand in especially sports apparel, right? I'm wearing a Nike hat. It's everywhere and people recognize it. I think generally the public has a positive impression about Nike. And if Nike stock is doing this, it's like, whoa, yeah, apparel's not it right now. It's technology. It's especially technology. It has growth. So interesting. Thanks for sharing that graph or the charts on Nike. Let me get back to the valuation here on Lululemon. We're talking about Lululemon. The stock is down 20%. And we're going to update the value of Lululemon, looking at the intrinsic value of cash flows and earnings per share. This one here, I'm going to do with you as you looking over my shoulder, so to speak. I've already updated my free cash flow using the trailing 12 months, and that growth rate is a little too high. They're growing by about 7%. I'm going to be conservative and just grow by 5%. And I'm going to grow years 2, 3, 4 by 5%, long-term growth by 4%, so that they could have price increases that keep up with inflation. They grow by opening new stores, having new partnerships, and so forth. And I add cash and take away debt. The net present value of those cash flows plus cash minus debt gets us to $28.8 billion. The market cap, 24.6, but soon it'll be 20% lighter. So 20% is going to bring these guys down to about 20 billion. So maybe late today, this is going to have 35% discount based on, I guess I could plug the number in just for fun. Right now they're trading at 165. Holy smokes. That is a morning that the CEO is like, what happened? So it'd be 32% discounted when the market opens. That's a pretty good discount. I have to admit, it's looking fairly good. I'm going to update the earnings per share using next year's number. And this is kind of a stock that is not desired this time. So I'm going to go with a PE of 12 It is a slow grower at best. Growth rate of the earnings per share, I'm going to use a 5 there. So in general, this is just not floating my boat. It's not a compelling discount. It's not broadcasting a 50% discount of, hey, this business is counted out. It's being, sent to the waste basket or the trash can by the stock market. There's zero value here. Nobody wants it. But you're looking at free cash flows and profits that are 50, 60% above the current stock price. That's not the case here. We are just dealing with a modest discount, soon to be even better. But I would think that it might be better to sit this one out for me. This would be a watch stock and see what happens. I'd rather be a little late on an upward trend for Lululemon, because so far it's just been a trail of tears for the last year or so on this stock. The 1 month has had some goodness to it. Year to date, rough. And this is going to get a lot rougher after today. Year to date, this thing's going to be down. Oh man, a lot, like 60% altogether, which is really, really tough. The 1 year, not good. And it hasn't had this upward trajectory over 5 years. Coming out of COVID, I think a lot of people had discretionary income because we were at home. A lot of those stimulus checks went out. And I would have thought that people bought, apparel, which they did. Nike had a pretty good run because I think a lot of people are buying an extra pair of Nikes with their stimulus checks. And then along with other apparel companies, they've had a rough time. So yeah, not my favorite industry. I don't own any apparel stocks. I like owning stuff that's more business oriented, and fashion is not my strong suit. So this one here, I'm going to sit it out. So that is Lululemon. So I think somebody asked about Duolingo, and I always get Duolingo mixed up with another company. Let me read their description here. So Duolingo operates as a mobile learning platform in the US, United Kingdom, internationally. Okay. That's actually, I was doubting my memory, but it was correct. So I could have sworn somebody said Duolingo is dropping.
Yeah, they have 4 gap downs over the last 4 days. That's not looking good at all.
So this is the stock that it's in learning, right? So I think the market believes that AI for learning is going to really disrupt this company. Now, let's take a look at growth. Now, when we looked at this, because I remember looking at this, when it was brought up on a live stream, on the face of this, I'm like, oh, I know what's ailing this stock, collectively, is the market is saying AI is going to disrupt these guys. And I think AI is beginning to kind of show up in places here or there. And when we go to the revenue, the big surprise is, well, Duolingo understands that AI is real, but so is their revenue growth. It's like, whoa, wait, hold on a second. You're going in the wrong direction. You're not going along with the story that AI is going to disrupt you. You're supposed to be losing sales, and instead they're gaining, revenue. So that's a surprise. And then you look at, okay, well, let's keep looking, because maybe they just don't make a lot of money from their revenue. All right. So they free cash flow chart looks good on free cash flow. Look at that beautiful growth. Nice. Gross margin, 72%. Operating margin, profit margin. So this isn't a software company, but I know Shadow Guy is on. The rule of 40 for software companies, 13 plus 39, that is 52. That's well above the rule of 40. So this guy is looking good from that metric. So the metrics, revenue growth, look excellent. The balance sheet has a lot of cash and very little debt. That looks good. So this stock here is not being treated very kindly by the stock market, but they're really operating well. And this is the kind of stock that I would like to, watch and probably buy at some point because the fundamentals are just so strong. What are your thoughts on Duolingo?
They're trading down almost to where they were. In fact, they're below their April 7th lows. They actually were even lower in March. So they didn't drop quite as hard on April 7th as other companies, but they're trading about there now. One of the things that I see on all these candles here, look how many are filled, which I mean red or black, versus how many are hollow. A hollow candle means that the opened the day at a certain price and closed higher if it's hollow. If it's filled, it opened higher and closed lower. So look how many filled days there are.
What does black mean?
I always have to think hard about this.
Red means the stock went up and then kind of came back down and kind of filled the candle with redness.
Yeah,
and what does black mean?
Black kind of means the same thing, but it opened higher than it did the previous day. Okay, so this is a black candle. It closed lower than the open. So the open was 440.
At the open, it opened high and then it came down through the day.
Yeah, you can see the open there. It's 446 and it closed at 390.
Perfect. Sorry for the interruption, but thanks for explaining it.
Yeah, but it's black, so that means it opened higher than the day before.
Got it. Okay.
You can see that on this black candle as well. But this is something that would really concern me if I saw this many filled candles, and we're looking at 3 or 4 months worth of data. I bet it's 4 or 5 to 1. So anyway, that is a bit concerning.
So Mike has a buy price at 255, and what do you think? We're at 270, 270, not too far away from 255.
Well, if it holds its support here, which did hold in March, then that'd be about 274. And if we pull back to these three highs, which was December of 2023, March of 2024, and May of 2024, then that'd be about 239.
Okay.
So I'm thinking somewhere in there. If it doesn't hold those, I mean, we're down to 145 or so.
Oof.
Would be support. There were buyers in this range from 241 to 180 using these volume by price bars. I can see the upper range is 248 and 177 is the lower range. So there were a lot of buyers there over a 2-year period.
Interesting.
The RSI is really low. PPO has been negative since the end of June. Its relative strength and momentum is worse than that of the S&P 500. It's being distributed. Money flow's been negative since the beginning of June. So I'd be careful with it, but there are some buy ranges in here if you're so inclined.
Excellent. So we got a new investor. Talk. Thanks for joining. So you're a brand new investor, and just keep learning. I imagine, $200. You could get into Robinhood or wherever you want to set up a brokerage. And I would say that, learn around things that already make a lot of sense to you. Maybe you have experience with. If you're, hey, I've worked at a software business. Okay, look at software stocks. Or I worked in finance. Look at what industries you worked in, because you'll have a knowledge advantage. And it's great to have you. Keep coming back. I think you'll learn a lot, and keep asking questions. And YouTube will serve you so much good information. It may be a little advanced at this point, but just keep learning, and over time you'll become a very good investor. Thanks for joining. Back to Duolingo. Thanks for covering the charts. I'm going to do a valuation on Duolingo. I'm seeing a lot of really good value. They're classified as a software stock, and they most definitely are a software stock. I'm going to show you their website, and they're a learning platform. You learn a variety of things, and it looks like it's on your phone, so you can just do it quite easily. And I know AI is all the big topic, right? But the user experience, right? People got billions of them on Earth. The user experience is really, really important. And Duolingo, if they've nailed that, and a lot of people are interested in it, this is totally an acquisition target. Meta could acquire these guys and let them run independent, but then also incorporate it into Facebook and all the other things. This is a Google acquisition. This is a Microsoft acquisition. I can go on. Adobe can acquire these guys because the growth is there. The revenue growth looks excellent, right? So I'm going to look at it fundamentally now and see where this thing values. And I'm going to compare it to another software stock. They're classified as a software stock.
The market's open. You may want to take a look at the markets real quick, and then we can come right back to Duolingo.
All right, let's do it. Stocks rise. Okay. NASDAQ's up 0.6, 0.4 on the S&P, and 0.19 on the Dow. And I think the way you're interpreting the JAWS report, you were sharing with me that you were seeing that the rate cut expectations have changed a little bit. Can you kind of repeat what you were telling me earlier?
Sure, I can show the chart as well. So yesterday there was no chance, 0% chance of a 50% basis cut. Not 50%, 50 basis points, 0.5%. Today, right after the jobs report, we now see 1.9. So it is back on the table. It was on the table about a month or so ago, and then it went away, and now it's back. With almost certainty, we're going to get a 25 basis point cut on the 17th.
Mm-hmm. Perfect. Thank you. And as I'm glad you covered it, because I know we have a new investor out there, and I'm going to cover why interest rates are so important in stock valuations. So for Algorithm, thank you so much. We're going to cover FTAA right after this one. We'll finish Duolingo and then we'll cover that one. So Carlos, just to stay on the jobs number, it came in and there was growth of like 22,000 jobs, but that was less than, for sure, like 6 months ago. And we're trending down. That means, in my mind, is that at some point we're going to go negative, which means a lot of job losses, which means over a longer period of time, that would mean that the unemployment rate is going to go up. In general, the jobs market is deteriorating. And having said that, the Fed is concerned with it. So how do you create more jobs? The estimate was 78,000. So payroll's 22,000. Yeah, okay. So they came in at 22,000. They expected 78. So big miss to the downside. So the Fed is going to be like, uh-oh, we're losing jobs. We got to crank up the economy. Let's lower rates. So that's where
probability just jumped to 12.2% for a 50 basis point cut now.
All right, perfect. So we got rates fresh on our minds. And now we're going to do Duolingo. And I'll remind you of what how interest rates are going to affect Duolingo's valuation in a minute. These guys are $12.17 billion market cap, revenues of $885 million. P ratio is a little high, but I showed you their growth rate's really good. Analysts think this is discounted by 60%. This thing's been kind of a bottle rocket. It goes up and then it comes down. And it's been really coming down. Over the 1 month, it's down 23%. I don't think that tells the story. It went from 540 to 270. That's pretty much a 50% drawdown from the peak. Now, it also rose over the course of just a couple of months. It doubled. And then it came back down. Wow. So it's not keeping its value when it really goes up. All right, let's keep going. So I'm going to look for the trailing 12 months cash flow. I'm going to pick that up and use it in the valuation. That's $328 million. And I also want to pick up their cash balance and their outstanding share count. So the cash balance was $1.1 billion. And their debt is $96.81 million. Okay. Got that. And their share count, 45.82. Okay. What's their dual? Okay. Their ticker is Duolingo. So free cash flow is $328 million. And their growth rate is really, really good. So I'm going to grow that by 30%. And you saw their chart. Their free cash flow is growing quite well. Now, let's start with 25 because they're growing really fast, and then 5% growth rate there. Cash is $1.1 billion. Looks good. And then debt, $96 million. Their shares outstanding, 45 million shares outstanding. So it's discounted by 46%. All right. I'm not going to argue with that. I think that's my senses when I looked at the stock. I'm like, geez, those are good fundamentals. It exceeds the rule of 40 for a software business. Clearly, it's at 52. Looks good. And I think their profit's going to expand as they get bigger. So 515 is the high price target. 16 analysts cover it. The low price target, we're above the low price target. Man, everybody thinks based on earnings per share that this thing is priced at a discount. And they're going to keep growing. They're going to be almost a $2 billion company in 2028 at 72% gross margins today. As they get bigger, I think that gross margins can get bigger because they just run a platform. It's not like, oh, we're going to have more customers, go buy more material, open up a new factory. No, it's like the platform, just add some more, servers so that the workload is handled and the performance is proper for the users. All right. Earnings per share in 26, $4.79. Okay. All right. So we'll come back here. I'm going to keep this at a 24. Grow this at a 15. So in general, the earnings per share is not supporting the stock price. It is a high growth stock, so I can understand somebody being more optimistic there. Okay. And do I have the growth rate correct? So they're going to be growing that much faster. All right. So go to 20%. So this thing's discounted. I like this company. I like the size of the company. I like that they're small. They're being counted out. They're just continuing to become more valuable. Over the 5-year, it does show that, hey, the market was paying attention to them. And I think they're going to trade higher over time. The fundamentals are there. I don't think AI is going to disrupt them. I think they could use AI to be a tool within their offering to make the experience even better. So I like Duolingo. I like what I'm seeing. I like the fundamentals. And this is going to be a watch stock for me with an intention to buy it at some point. So let me just note here that I got to update my Duolingo. What are your final thoughts on Duolingo?
I've used their product for about a year or so, a little less. I didn't stick with it, and that's the one drawback that I've heard a lot of people speak of is people are eager if they're going to be traveling overseas or what have you, that they'd like to learn a little bit of the language, and it might be helpful for that, but sticking with it long time is not something that they've been able to really conquer.
Okay.
But I do like the product. They've really put together, it's been 5 or 6 years probably since I've used it, but it was a great product then, so I can't imagine what it is today.
And I understand your logic, right? Totally get it. But when we look at Duolingo's revenues, they are growing. And it's
Right.
not like they're growing by 3%, they're growing by 40%.
Right.
It's like, so there's your experience makes sense. That might be the experience I would have because I'm just so busy. Do I have time to learn for the next 2 years? No, I don't. Is something coming up that I want to learn for? Yeah. And maybe I become a power user for a month or two and then I cancel my subscription. It's not like music or videos where Netflix, right? Yeah. On my downtime, I'm always in the mood for seeing an interesting film. But the data is the data. They're growing at 40%. So there's people out there that do want to learn. They're like, hey, I don't want to watch movies all day. I like learning new topics. That's my entertainment, I guess. And I get that. All right, let's turn our attention to a request from 4Algorithm. Thank you so much. And you want to look at FTAI. All right, let's take a look. So FTAI is Aviation Limited. FTAI Aviation Limited owns, acquires, sells aviation equipment for the transportation of goods and people worldwide. It operates in two segments: aviation leasing and aerospace products. The aviation leasing segment owns, leases, manages, sells aircraft and aircraft engines. Okay. Good. So I'm curious about this business. I've seen that these guys, because these guys are a finance company within aerospace. But as a leader in the maintenance, repair, and exchange. So are these guys helping with your maintenance of your airplanes? So engine and aircraft leases made simple. And then they have engine piece parts and kits. Okay. So I want to make sure I understand this business. So the first part of their business.
They rent geese.
Say that again.
They rent geese.
We better watch it. We may get some PETA or some organization saying, "Hey, don't give people ideas about renting animals." All right, so they're doing leasing here. So they're doing full maintenance of leased engines, eliminating hassles. Okay. Okay. So they want to take over your lease maintenance. Okay. Now on my downtime, if I could watch a 2-hour movie about how cool these engines are, by the way. I think it's fascinating. Okay. So they're integrated in the aerospace industry. And that was one area overhaul. Let's take a look at that. So this is your planned maintenance cycle. You take it in and they can quickly maintain an aircraft and get that aircraft back in service. Yep. Looks really good. So 20 years ago. Yeah, 21. It'll be 21 years ago this December. I worked on a project for Boeing, the big aerospace company, and I created a modification and software solution for something they were doing. They were putting entertainment systems in aircraft, and I got to know aerospace back then. Presented it to Boeing up in Seattle, and they bought it. That was cool. That was a cool experience. Look at that, man. That's a nice factory floor. All right, so we got our heads around this business. They're doing maintenance. Now, this isn't going to go away. This is going to be around for a long time. And I'm glad I looked because I saw rental and leasing services. I don't agree with that. I think it's more maintenance services. They're partnered. The owners of those aircraft, airlines, whoever, is contracting with FTAA and saying, "Hey, here's our maintenance schedule," and then they are the ones that are actually doing the work. I think it's going to be a stable business because air travel is here to stay. It just keeps growing. I don't want to buy an airline, but I wouldn't mind looking at this one. So the year to date, it's up 8.84. The 1 year, 32, 5 year, 902%. Beautiful. That looks really good. Okay. Now, coming out of COVID, nobody was flying, right? Airplanes were kind of being stored until we got back to normal. We got back to normal, and boy, did we get back to normal. This is the super normal. So market cap 16 billion, revenue is 2.14 billion. That seems a little expensive. We'll look at their margins. Net income looks okay, not very good, like a 4% net income. And PE ratio, we'll see what their growth is, but high level looks a little expensive. And 18% discount according to analysts. Wow, look at that growth. I didn't expect to see that. And where are these guys located? So United States. They're headquartered in New York. Okay. So their growth is really, really good. Now, air travel is really high, and it's not going down. People like to travel. And the business travel, I don't know that business travel is back to pre-COVID normals yet. It's all like, well, I'm sure some of it's back. But a lot of it is people just like traveling, visit family, go on vacation, go have experiences and all that good stuff. And that travel is creating more maintenance, which is where FTAI is going to benefit. So their growth is really, really impressive. Looking at the quarterly, man, they stuck the landing. That looks really good. I'm impressed with that kind of growth. And again, this is a industry for them. It's going to be stable. It's a demand that's never going to go away. So the gross profits are not awesome. Looks like they're about 45% gross margins. They have to hire a lot of people. They have to pay a lot of people. So that makes sense. Cash flow doesn't look good. Why is cash flow negative? Interesting. They are growing. So I imagine as they get bigger and bigger contracts, they're like, whoa, we're going to have to buy more equipment to do the maintenance on a bigger set of customers with a larger set of airplanes. Okay, that makes sense. That makes sense. Okay. Gross margins, 43%. They are profitable. That looks good. Top line revenue looks awesome. Now, I'm okay with cash flow being negative if they're growing at these rates, knowing that they're probably having to buy a lot of tools and machinery and everything they need to maintain a bigger customer base. So when we look at the forecast, we got 12 analysts looking at this stock. The most optimistic analyst is at $300 price target, and most bearish one is at $123. They are expected to grow nicely this year, next year. They're going to hit kind of a lull, and then they're going to grow again. 15 analysts are weighing in on the growth numbers. I think they're going to keep growing. They probably are doing something very well, and these airlines are like, yeah, let's just go over to FTAI, and they're going to take care of things. So that looks good. Earnings per share this year, $5.18. Next year, $7.38. So I'm going to note that. we're going to value this stock just on earnings per share because there's no cash flow to value. And for some reason, analysts think that it's going to hit a lull in 2027. I just don't know why, but only a couple of analysts are putting that forecast out there. For now, it's growing at 42%. So we grow by 25%. All right, looks good. See what their debt looks like. Make sure they don't have a bunch of debt. They do have some debt, $3.48 billion, and they have $300 million of cash. Debt to EBITDA is 3.79. That's above 3. They're in a growth period. I think that's acceptable, but you got to keep an eye on it. If their business slows down, you got to really keep an eye on it because if their EBITDA drops, their earnings drop, and they have a lot of debt, okay, that spells trouble. For now, I don't know that this is alarming, but it is like above where I would want to see it. And if they can grow into this number, they'll be fine. All right, so let's go over in value. Before I value it, you want to show some charts on FTAI?
Sure. It's been pretty volatile over the past year, but they are getting back close to their all-time high back in November of last year, and then again at the beginning of December or of January of this year. So that's about 174.63, somewhere right in there. They did reach a low in April of $83 a share, and it looks like they're up about 89% since that point. They are trading above an upward sloping 20 and upward sloping 50. Looks like it could be a downward sloping, maybe flat 200-day moving average. They've had some big volume days. This must have been around earnings, if I was guessing, because that's after options expiration, so it's probably earnings if I was guessing. They are starting to get close to being in overbought territory. The RSI is approaching 70. Anything over 70 is considered overbought. I only see 1 or 2 weeks, 3 weeks maybe, where they've been in an overbought condition. So they tend to pull back pretty quickly after they get to that state. So I'd be careful here. I'd be looking for that 173, but I'd be watching for a pullback quickly after that because they don't stay overbought for more than about a week. There are other companies that can stay overbought for 3 months at a time. This does not appear to be one of those companies. Let me go back maybe even a couple years. So here you can see where they were overbought for about a month, but this was in pretty much from lower left to upper right period of time in 2024. They seem to have lost that luster here the last year or so. So keep an eye on that. PPO is positive. Looks to be flattening out a little bit, but it is in bullish territory. Their momentum is less than that of the S&P 500, but their relative strength is above that of the S&P 500. Accumulation is actually pretty low compared to what it has been. So whatever happened here, and I would have to research what happened on June the 27th. But whatever that was, there were a lot of sellers. You can see that the money flow went negative and stayed negative for almost a month. And the accumulation has not really recovered very much since then. So that's going to play against anything really above this 174 price, at least in the short to medium term. They are outperforming the S&P 500 over the past year by 10.3%, and they're outperforming the industrials group by 8.47%. So it looks like an interesting company, but just be careful here.
Yeah.
It might struggle. It might make it to that price, but it may struggle staying there, and it doesn't look like it stays overbought very long.
Okay. And when we look at evaluation, I can't use cash flows because they're investing a lot in their business right now. The forecast would be really just a guess, a wild guess. But if we look at earnings per share, it is a discounted stock. It's 53% discounted. Now you can trim down the PE ratio to 24. It's still discounted. I think they deserve 36 because it's such a growth stock right now. So it provides a discount, and I think I like Daryl's analysis because it shows you what investors are doing. It hasn't been going up a tremendous amount, but I do like the trend that I'm seeing here. And overall, it's been a winner for the 1 year, but the 5 years just been awesome. It's been the right business in the right space. Very, very good idea that they provided this business. And I think the margins could get better, especially as they tool up and they're done. Once they get done buying all the tools they need and all the machinery, their profits are probably going to go up. And they start appreciating it fully. The profits are going to go up. So that's FTAI. Thanks so much for sponsoring that review. Hopefully you found it interesting. All right. So let's take a look at the stock market real quick, see what's going on. So the market did come down from the last time we looked at it. The S&P is only up 0.14%. NASDAQ is up 0.44. The Russell is up 1.02%. Okay. And if we look at a heat map, Broadcom is up 10.6%. NVIDIA is down. This one is a riddle that I can't solve. I always think these are they're eating out of the same industry. So why one would go up and one would go down? Don't know. And software space is doing okay. Looks like Salesforce, it's picking itself up off the mat because it got knocked out yesterday. It wasn't a complete knockout, but they had to pick themselves up. Adobe's up 3%. Go Adobe. Intuit is up 1%. ServiceNow is up. So the software space is working. Google and Meta are doing their thing. Very good. Tesla's up. And banking, financials is down. Healthcare is up. United Health is up nicely today. Real estate's up. Probably, I'm guessing that real estate's interpreting the jobs number the way you did. Hey, interest rates are going to come down. So we're going to be able to do more deals in real estate. And materials is up. Energy's down. Oil prices are probably down. Look at this. Aerospace is down. Have you heard anything in aerospace that would drive that industry down?
Oh, no, I haven't heard anything this morning specifically on that.
All right. Interesting. Okay, so let's see what we've got here. We've got so AMD, Shadow Guy was mentioning that AMD down today. Yeah, it's AMD and NVIDIA are down. Maybe the market's saying, well, Broadcom is going to develop this chip. It's going to take away from market share from NVIDIA and AMD. maybe. And then keep going down here. Ben 10, good to see you. Back to Duolingo. Yeah, that's what I read on their website, that their success is because they make it fun. You're learning something, and people love games on their phones. Man, they love games on their phones. Kids love games on their phones. Um, I I don't, but that's just me. Probably because I'm behind a computer for so many hours each day. The last thing I want to do is be behind another screen. That's me. I know a lot of people love games. Cool. All right, so wow. 8 languages. That's
Yeah,
incredible.
I knew a guy in the army. He spoke 7 fluently. That's a real skill.
It is. It is. I know 2 languages. I tried a third. It didn't stick because I didn't use it. But it's got to be incredible for somebody to actively know 8 languages.
Yeah. One of the interesting thing I found in all of my travels, and maybe some of the people living in other countries besides the U.S., maybe you can help confirm this or tell me I'm full of it. But I found that when I try to learn enough to at least get by in a different country, I quickly find out that most of the natives of that country want to speak English. They want to practice their English. So even though I may have tried to learn some other languages, it quickly reverted straight back to English because that's what they prefer to do for the most part. And that's been in every country I've ever traveled in.
Right. So Shadow Guy, we talked a little bit about, aircraft maintenance, and he said this is an interesting stock. I can't pronounce this. Zurich. Flughafen Zurich operates the Zurich Airport in Switzerland. The company operates through aviation, passengers with reduced mobility, air security, access fees.
You kind of have to speak like you're mad, Victor. Flughafen.
So $7.5 billion market cap, revenue 1.34. P ratios look okay. See what their revenue is growing a little bit, not a lot. Nice and stable. Did they pay a dividend? Dividend payments of 2.33. Looks pretty good. The cost of revenue is really low. Very good gross profit because they built the airport and then they discharge fees. So this is kind of a real estate play, so to speak, but you're operating infrastructure in an airport. They do cash flow. Looks good. Gross margins, terrific. And that airport is going to be a need. Airports are not going away. It's going to be a necessity. So this is a nice stable stock in my mind from a revenue standpoint. It's gone up 25%. It's gone up 75% over time. I like the shape of their trend or their stock price, the graph. It's up and nice and smooth. The beta's got to be really low on this stock. It did sell off along with everything else, but then it just kept rising for the 1 year. Year to date, it's up 12. This is a really solid stock. This is a low risk stock. RSI is 60, a little bit overbought. Wonder what the beta is below 1. So it's more stable than the stock market itself or the generally. Yeah, looks good. This is a nice stable stock. Looks good. Any thoughts on Flughafen Zurich?
Oh, nothing for me, Victor.
Okay, no problem. All right, so we covered a lot of ground today. Oh, Flughafen means airport. Very good. Saeed wanted to look at new scale. New scale. Okay, let's take a look at new scale. So I'm thinking you want to look at New Scale Power Corporation. Please correct me if I'm wrong there, Saeed. And so these guys are New Scale Power Corporation provides small modular reactor technology solutions. It offers New Scale Power Module, a water reactor that generates 77 megawatts of electricity. The company was founded in 2007 and headquartered in Corvallis, Oregon. I believe that's where Oregon State is headquartered. So they probably have a lot of engineering students coming out of Oregon State and can be employed at this company. $10 billion market cap. Revenues are low for the time being. So you're paying, that's not bad. You're paying about 20 times revenue. So this is a newer business in a category that's really exploding. Year to date, up 99%, 343. Okay, so this stock's really been moving. So they are producing power. Let's look at their website. I'm curious to see what their operation looks like. So our uprated New Scale Power Module. So this is all right. So I want to get my head around what kind of power they're producing right now that is being used and generating that revenue. Okay.
Do they have any commercially deployed?
Yeah. This is the one that's commercially deployed now.
Okay.
So these guys do power generation, hydro production, water desalination. Okay, got it. So they're using this right now to generate power, income, revenues. And then this is the future of advanced nuclear energy. Small reactors. So this is the future as they see it. So light water reactor. Okay. So this is really interesting for the market because the power demand is supposed to really skyrocket with the increase in data centers and AI workloads. Market cap of 10 billion now. The stock is up and the revenues they're really growing. 305%. Let's take a look at so the quarterly doesn't show like smooth revenue. It's because probably when they deliver one of these units, it's like a big giant, sales order. Boom, delivered it. Okay, great. That's $34 million. And then next month they didn't deliver one. So it's like, oh, revenue went way down. So they're going to be a little bit unstable, or the revenue is going to go up and down. So it's not going to be a smooth revenue line. 56 million. Okay. So right now they're small, so they're losing a lot of money. They're making some money off their cash, I believe. So they are losing quite a bit of money. Free cash flow, they don't have any. They're losing a lot of profit margin. They're losing a lot of money operating. They're trying to get up to a scale where eventually they will make money. So let's take a look at their cash position and then their burn rate. So they have $420 million of cash. Trailing 12 months, they're burning $95 million, 100 the year, full year of 2024. So they have a solid 5 years of operating to get it together, become profitable, or they'll have to have another funding round. They'll have to issue more stock or go into debt, something. Now they have a technology that seems to be working. So I think their future is there. It's just, is this thing going to make a lot of money for investors? This is a hard one. I don't have anything to work with. I don't have any cash flows. I'd be guessing at cash flows. It's not an industry that I'm familiar with. So I can't give you a valuation. This one is purely, if you believe in the space and you think this is going to be big, or you don't, like me, I don't understand the space well enough for me to be an investor. I can't invest in this one. I'd be guessing. I'd be going along with the herd on this one. And that's not what I want to do. I'd rather go into companies where I feel like I have an information, if anything, ability to understand the business, but preferably I have an advantage. I know that industry. I know that the market is acting irrationally and want to take advantage of it. I don't have that here. It's a total, go with the flow, go with the market. And I don't do that. The fundamentals, it can't get you a valuation. It's depending on what you think is going to happen in the space, the stock could go higher. It could also come down. If all of a sudden they're like, well, you know what? We are not going to need all that power we thought we were going to need. And this company isn't going to be in the demand that we're going to have. It's going to come back down to, very low valuation because they're not making any money. And this is an expensive industry. So those are my comments on NuScale. It's probably caught your attention because it's going up so well. But that's just not, I can't give you a valuation. I can't make a decision on the company. Any thoughts on NuScale, Daryl?
Yeah, they do drop below their 200-day moving average on many occasions. So I like this kind of technology, anything related to space. I like aerospace. I kind of have a tendency to move towards those kinds of things, but I'm always careful. I would look for a pullback at least to this 200-day range before I even would consider moving in, but that's my opinion. That's also at the tops that you see in February and the end of November and beginning of December of last year.
Yep. And Shadow Guy suggested, or he thought that company reminds him of Oklo. They also provide energy. They're going to do it through Advanced Vision Power. And this stock has been working. Yeah. Yeah, this space has gotten a lot of investment. The story got red hot and people jumped into it. So good luck. Exciting space to be a part of. Hopefully those comments were interesting to you. Thanks for the suggestion out there, Saeed. All right. So, all right. That's a good time to land the plane. Good stream, sir. Thanks so much for joining me. And let me wish you a nice weekend. Any last thoughts?
Well, the markets are stalling out a little bit.
Man, what is going on? Yeah, the S&P is down. Dow is down. NASDAQ is barely green.
Yep. Oh, it's an interesting turn in events.
NVIDIA is selling off. Microsoft selling off. The financial space is selling off. Now, financials, if we have lower interest rates, is that going to make banks less profitable? They can't charge the higher rates on loans and stuff?
It actually helps them because they pay out on the low end and loan on the high end.
Mm-hmm.
So the lower the short-term rates, the better off banks usually do.
Yeah. And across the board, the financial sector is in the red. All right. Energy's in the red, probably because oil prices are down. There's some green out there, but there's some big red spots. NVIDIA being the most valuable stock, it's down. NVIDIA's still holding its rally, so that looks interesting. All right. Well, we'll end it with that. Everybody, thanks so much for joining the stream. And once again, thank you to our new member, Francisco. Please email me. I put my email address in the chat, and then I'll get you set up with the member perks. Thanks so much. If anybody else wants to be a member, I've got the channel. If you go to the YouTube channel and go to the home page, you can see the options. If you would like to consider being a member, it'd be great to have you. A lot of good perks. I think I try to make it valuable for every level of investor. Take a look. And also take a look at Daryl's YouTube channel. He's got a lot of great content, and really encourage you to follow, subscribe to his channel, and watch his videos. I think you'll be a better investor for it. All right, sir. Well, have a great weekend. Thanks again for streaming with me.
Okay. Thank you, Victor. I really enjoyed it. Thanks to everyone for attending.